What's up guys, Taiki here, and I wanted to give an update on the CANTO thesis. So if you like the content, please like and subscribe, and check out the premium Discord. The link will be in the description below. So right now, CANTO is trading at 30 cents, and it's under some immense selling pressure right now. And CANTO has been a multi-month long thesis that I laid out back in September. And it's still up 2x from those prices. And if you want to learn about it, I have a whole Netflix documentary dedicated to this. Right now, CANTO, if you look at the daily, there's a lot of selling pressure here. Back in October, we saw a 30% correction in the price of CANTO. And then in mid-November, we also saw a 30% correction, a little bit over 30% correction. And right now in mid-December, we're also seeing a 30% correction. So it seems like once a month, CANTO goes down 30%. I don't really control the price. I'm sure that my DMs are filled with people saying that, why is Taiki dumping on us? I will guarantee you that I have only purchased on the way up. I haven't bought any recently just because I bought in September, October, and some in November. But all I can do is create a thesis, buy tokens, and sit on my hands while I wait for the thesis to play out. So this video, I will be dedicated on doing a brief recap of the CANTO thesis, and then later in the video, I'll do small updates on where the thesis is and product upgrades. So the CANTO thesis is similar to, if you go back to July and August, I called for the beginning of the DeFi bull market and the end of the DeFi bear market. And at the time, I got a lot of hate for this just because prices were going down. But I think in hindsight, if you look at the stablecoin supply in the past year or so, you see that, roughly when I made that post, that was when the stablecoin market cap bottomed. So I think in hindsight, the thesis itself was correct. Of course, you can argue which coins are best to buy under these conditions, but I can only focus on this post here. And the idea is DeFi TVL just went up only in 2020 and 2021 when the Fed cuts rates to zero, and then as soon as the Fed started raising rates, DeFi TVL left. Why would you risk capital on chain when you can earn 5%? The risk-free rate, whatever the risk-free rate, buying T-bills on Fidelity, other brokerage accounts, etc. So the entire thesis is that, for DeFi to come back, for capital to remain sticky on chain, we have to have a shift from non-yield bearing dollars to yield bearing dollars. Because if you think about USDC and USDT, what is their business model? You give them fiat, they give you USDC, they buy T-bills with your fiat, and as a USDC holder, you get nothing. Okay, so Circle, Tether, they're very profitable businesses because they're offering a service, right? They're creating a stablecoin, but they don't pay you anything. And the entire RWA thesis, or the real world asset thesis, is that I eventually expect more and more capital to flow into yield bearing dollars or real world assets. And if you expect DeFi TVL to hit all-time highs, let's say 200 billion, or eventually hit $1 trillion, then where is most of the value going to come from? You can argue meme coins, you can argue just random things pumping, but I think the majority of the capital inflows that's going to come into crypto is going to be in the form of dollars and stable coins. And USDC, usually if you look at the market cap, its share just keeps declining. Why is this? Well, we're seeing a growth in these yield-bearing dollars. For example, Maker has a lot of T-bills, right? So they have a decentralized stablecoin called DAI. It's backed by T-bills, and if you look at this dashboard, makerburn.com, every couple hours they buy back $30,000 of their own token because they're making free money. Not free money, but if you look at, let's say, revenue and profit, and look at the fee income, all-time, their revenues at all-time highs. So the entire idea is if DeFi were to come back, which I think it will, I think capital has to flow into these yield-bearing dollars. So as an investor in DeFi, I want to allocate into projects that are offering this type of yield-bearing dollars, or in other words, stable coins backed by T-bills. So Maker, I bought Maker back in July, and it is up 30%, but it has underperformed. And the price action for Maker is pretty interesting. So the orange line here is the price of Bitcoin, and you notice that whenever Bitcoin just stalls, so this is from June to, let's say, mid-October, Maker just went up, okay? However, when Bitcoin just pumps, as it has all this quarter, Maker just stalls. So I think Maker is a pretty anti-cyclical token. So if you expect crypto to pump in the short term, then you should expect Maker to underperform. But if you expect crypto to underperform, or just Bitcoin and Ether to just go sideways or down over the next couple of months, I would expect Maker to just resume its outperformance. I've been wrong on this thesis. I mean, I was right in the sense that it's up, but I mean, part of my thesis was that back in July, I didn't expect crypto to like pump this much. So if I expected crypto to remain stagnant, sideways, choppy, then I would have just expected Maker to outperform Bitcoin and Ether. But I just think that, I mean, look, I'm not gonna say that this has to happen, but my idea is that okay, like we've seen a strong surge in crypto prices. I think next year is gonna be bullish, but I think it's healthy if Bitcoin just consolidates a little, and if we're in that environment, then I think the real world asset trade might have its second leg. Because crypto moves in cycles, right? We have periods where certain sectors outperform. You have periods when other sectors outperform. If you look at the dashboard, and look, also sorry, this is private right now, but I'll publicize this once it's fully ready. This is the dashboard I'm creating, and you can kind of see that it's like pretty choppy here, right? But let's see. Let's wait for this thing to load. Okay, there you go. You have periods. I guess you can chart it against Ether. So we have the Alt L1 index, the real world asset index, L2 index, DeFi index, and okay, this is very, very choppy. But if you chart the price of the index relative to Ether, we've seen that in the recently, the RW index, or I guess in like Q3, it's outperformed and now it's lagging. And recently, the Alt L1 index is like pumping just because Solana, in the Avalanche, all these other L1s are just like going insane. I'm not sure why this is kind of lagging here. Let me refresh here. But anyways, that's kind of the idea. And then, CANTO also has a decentralized stablecoin backed by T-bills. It's called Note. And my bet was that, once Note launches, let's go back to this tab here. I expected TVL to go up. But if you kind of zoom in, it really hasn't happened. I said, TVL would go up back when it was like 40 million TVL, and now it's at 63, which is a little disappointing. And I said that I expect TVL to continue going up into year end, and then at the end of the year, I have to reevaluate. And things were shipped. For example, there was this NFT 1155.tech, and look, like I don't really care about this. If it works, great, right? It's like a cherry on top. And they're kind of taking elements of friend tech, where if you if you buy a key, you can mint an NFT, and 3% goes to the creator as a royalties, 3% goes to key holders. So if you own the key, you get some revenues, and then 3% to the developer. So I guess online incentives. But if you look at the NFT market, I mean, it's $134,000 worth of volume, which is not bad, but this isn't really part of my bull case, so I'm like just highlighting it here just because it did launch recently. The bigger part of my thesis has to do with this, which is like Vivacity Finance, and this is a lending market that allows for certain types of RWAs to be used as collateral, and you can borrow note against it. So for example, one of the RWAs listed is this. V-Weeks, or like this is like the Vanguard high yield corporate index fund, right? And if you look at the website, I'm not going to do that right now. This index pays roughly 7% in yield. So I mean, this does have some price risk, just because there's duration risk and credit risk. But the idea is, if you can use this asset as collateral and borrow a stablecoin against it, then technically people should be willing to pay, let's say, 5 or 6% to borrow. So for example, $10,000 worth of this Vanguard fund, borrow $8,000 worth of stablecoins, and then swap that $8,000 into this. So you're kind of levering the yield. And because Vivacity is offering the service, even if you're not even if you don't care about like this asset, right? If borrowers are willing to pay like 5 or 6%, then you can lend out stablecoins to those people and be paid like 5 or 6% to do so. Right now, the lending rate and the borrow rate and lending rate is the exact same, is 4.4% right now. There's like some liquidity mining incentives. I have some money in here, like not too much. And honestly, like this launched, I think a day or two ago. And I mean, there's only like $1 million in here. So, or like 2.6, which isn't like that impressive, to be honest. Ideally, like they have some launch partners, they all deploy capital and the metrics look amazing. That hasn't happened. But also like, I don't work for the team. I'm not being paid by the team. I'm literally just an independent researcher. So, all I can do is look at this and be like, okay, like I thought, like I'm back in September, I thought all these things would launch. And I thought it would be somewhat bullish. And as they launch, it's like, okay, like, I mean, it did launch, and it's cool. I think there's a lot of product market fit here, but I guess things move slower than expected. I mean, that's why maybe prices are correcting. I've seen like a lot of wallets that sold in the past 48 hours, and the same people that bought had like 40 cents is like selling now. So maybe there's some capitulation. Maybe people think there's opportunity cost. Of course, right? I mean, I'm not here to tell you which coin is going to pump the most in the next 48 hours, especially given like I have a audience and whatnot. I'm more interested in developing multi-month theses and then waiting for it to play out. And you can, I mean, this is a pretty good stablecoin farm, right? And you can also receive Viva points. I don't really think these will be worth that much, but who knows? Maybe it'll like they'll have a token, and also there's going to be like a VE CANTO thing. I don't even know how many tokens are locked. I guess you can see it here. Anyways, I'm not going to spend too much on this, but that's kind of the idea. So the thesis is if you expect real world assets to be deployed on chain for the next 12 months, 24 months, 48 months, then I want to bet on the fastest horse. And so far, I own Maker and CANTO. They're both up. I think the thesis is sound. I think it might not be the sexiest in terms of the tokens that pump the most. But I think from a fundamental perspective, it makes sense. But I'm not going to be like, I'm not going to have this bag holder mentality of I own this token, so it has to do well. The fact is TVL growth has been slow, so I may have to reevaluate the thesis, let's say early next year. It kind of depends how it goes. I've also heard like bearish cases of, okay, like, well, who cares about real world assets? Because, like the Fed is going to cut rates. The Fed said that they're going to cut rates 3 times next year and the market's pricing in that, okay, like you're going to cut way more. I'm not sure if the market pricing is, if this is like the best way to view what the market interprets it as, because I think there's like some bimodal distribution where some people think that we're going to see a recession. And if we see a recession, the Fed might cut rates to 2%. And then there's some people that think that, well, if we don't see a recession, then the Fed might keep rates roughly at 4.5. And then, what we see here is like the median or like the average prediction of like where people expect rates to be. So, I mean, I'm not like a macro expert, but I still think that, why would you hold USDC paying nothing when you can eventually hold dollars that pay something? And even like, let's say, you're optimistic or like where Fed cuts rates and you think it's going to go to 4%. I still think that, if the risk-free rate is at 4%, I still think that most of DeFi suffers. The truth is, like most DeFi products, and I'm a DeFi bull at heart. I'm a promo bull at heart. But most DeFi products, if you really take a hard look at the sector, I don't know if DeFi can compete when rates are at 4%. The product just has to get better. And that's why I said, okay, like for DeFi to compete, I think we have to import TradFi yields on chain, and then, people can build interesting products on top of it. Maybe, CANTO is one, maybe Maker is one, maybe we'll see other ones. I wouldn't be surprised if sometime next year, something crazy launches next year. And then I'm like, okay, like I'm wrong on Maker and CANTO. I'm time to buy that token. So trying to be open-minded here. But hopefully this video provided some guidance on, like where I think, the market's going to go. And also, people, and like Evan's also like a CANTO bull or RWA bull, but people like just focuses a lot on the rate path being downwards. So let's say they cut rates 100 basis points, but they ignore the fact that TVL is going to go up 10 to 100x or 1,000x in that time frame, right? So it's kind of the same thesis where, yes, like rates might go down, but if rates go down, then we should expect TVL inflows into the DeFi sector. And if we see TVL inflows in the DeFi sector, I think that there's going to be In terms of market share, I think real world assets, aka yield bearing dollars, is going to take away market share away from non yield bearing dollars. And that's kind of like the bet I'm making. But we'll see. We'll see. I have no idea. So far, the CANTO thesis and maker thesis, like it's worked out so far. I understand it's like frustrating, I guess, if you, I don't know, like are like holding it. But all I can do, all I can do, right? I can't speak for yourself because I just like make these videos, right? Like, like I made all these videos. In the future, I think from now on, I'll only make videos um, once it makes sense. I was making weekly videos, but like no one was watching it, so I'm like less inclined. And I don't really run ads on my channel, as you can see here. So I don't care about views, but also these videos does take a decent time to plan, and it does eat into my time and stuff. So maybe I'll make a CANTO video twice a week if it makes sense. Maybe I'll make a CANTO video twice a month if it makes sense. It kind of depends on like launches, fundamentals, price action, and whatnot. So just letting people know in terms of if you're or in like upload cadence and whatnot. So yeah, we'll see. At the end of the day, I'm not going to be a moon boy and say that it has to go up. I think just TVO has to flow here. Okay. If it doesn't, then I'm wrong. If it does, then I'm right. We'll see. So thank you guys for watching. See you guys another time. And if you like the content, please check out the premium Discord. Link will be in the description below. Thank you guys for watching and see you guys next week. Bye-bye.